Let's talk some more earnings. I'm going to talk some Kohl's, symbol KSS. This one's on the move as well, down about 2% here, Jenny, but is bounced about $1 off of its lows. So Kohl's, a very interesting name to have watched over the last year. It's been very, very steady in its outperformance. Really had a nice 2021 so far.
It has. I mean, it's up about 2% this month, despite its move lower today. Like you just mentioned, it actually hit 52-week highs yesterday. But what I think is really interesting about Kohl's, which sort of differentiates itself from, say, a Target, is if you look at it on a one-year chart, it's had a great, last 12 months. It's been in a pretty steady uptrend off its lows of about $10 a share, now trading at about $60 a share. But when you zoom out on a 3-year chart, it sort of paints a different picture. It's still about 30% off its all-time highs of about $83 a share it made back in 2018. So I think this is interesting because this is unique to some of these sort of pandemic winners we've deemed as, say, like a Walmart, a Target, and Amazon, because it is still well below some of its peak. So I think that is interesting when considering Kohl's. And, the earnings momentum is still going strong this week with so many retailers still yet to report. And for the first quarter, which they'll report tomorrow pre-market, analysts are expecting quarterly losses of about 3 cents a share, which represents about 99% year-over-year growth on revenue of about $3.5 billion, which would signal about 44% growth from a year ago. And they have also beaten their EPS estimates in the last 3 straight quarters. But, Kohl's is sort of similar to Target, I would say, but also very different. They are still benefiting from their growing digital business amid the pandemic and sort of expanding these omni-channel capabilities, like we've said in so many of these names. And they have this strategic plan, which they've laid out in 4 key areas, and that is to drive top-line growth, to expand their operating margins, to implement disciplined capital management, and to undertake an accountable and inclusive culture. And we're also seeing something that I thought was really interesting across retail alike, is that we're seeing this sort of trend of trip consolidation. Right now, consumers like to go into one store and they like to find everything. So some are saying gone are the days you go to multiple stores for multiple things. Right now, consumers are sort of want everything at their fingertips, which you do see in some of these big box or department stores. And this quarter, they also just recently unveiled their list of the first 200 locations, which they'll have Sephora's in by fall of 2021. So I think that is also a very interesting partnership, because I typically associate Sephora with very high-end spending. Sephora, if you've ever been in one, although I'm sure you two haven't, it is not cheap. So I think that sort of drives a new demographic to Kohl's, which I would say would operate at a more lower end, market. But some tailwinds are kind of similar to what we've talked about with retailers alike, is that they're still sort of battling their gross margins with some of these freight surcharges, with their expanding digital business. Really, expenses are the biggest concern for this quarter. But what I thought was interesting about Target's earnings specifically is they highlighted this growth in apparel, which I mentioned yesterday. They actually said their apparel sales have grown over 30% in the last 2 years, and specifically their own exclusive brands grew about 36% in the first quarter. So this is sort of sticking with the narrative that people are maybe taking off those sweatpants. They need to find things to wear as the summer hits and things are reopened. And I think that's sort of funny that, this is just this ongoing trend. I actually read an interesting report that said people have put on weight, so now they need to buy new clothes to sort of accommodate that. So that is what our first tweeter sort of talks about, some unexpected winners of this, say, apparel boom, which says, Kohl's, these mall-type names continue to look good. Dillard's, Nordstrom, Urban Outfitters, Macy's, Abercrombie & Fitch, Gap, etc. Giving Kohl's a try here with a stop, of course. So, this is funny because a year and a half ago, we would have said that some of these mall-centric names were sort of being left for dead. But now with this need for people to go out and buy clothes or buy makeup or just, revamp themselves, let's say, some of these unlikely winners are maybe getting a pop in the next few months. And our next tweet sort of focuses on another partnership, which is also driving pretty significant growth to Kohl's, which says, I just returned something from Amazon at Kohl's and they gave me a 25% off coupon to use in the store. I didn't even have it wrapped or packaged. They do it for you. Can't beat it. So I know LikeFolio will talk a little bit more about this Amazon and Kohl's partnership, but what I did read is that over the last year, it's estimated that 2 million more customers visited Kohl's because of their Amazon returns. So that is no small figure. And again, I think this is sort of channeling maybe a different demographic than would be be going to a Kohl's, because all of a sudden, you pay, I think, like a flat fee to ship back your Amazon returns. I do this a lot, but at Kohl's and Whole Foods, you don't have to pay any fees. So I do think there is that degree of attractability with a consumer that says, I don't want to have to box my item. I don't want to have to pay for shipping. And then all of a sudden Kohl's is sort of your perfect place with the set, which then of course drives foot traffic into Kohl's. Kevin.
Jenny, my first question to you is, how do you know that Alex and I don't go into Sephora? You don't know that. You think I don't roll out of bed and look like this? It takes a lot of work to get this face ready for these shows. Now, looking at what you talked about with Amazon, and I'm sure we'll get into some of it with LikeFolio, I think the Amazon Kohl's relationship is, a lot of people doubted that when it started. But think about 2 million more people entering your stores. That can't be a losing situation. And if you give them a coupon while they're there, even better. So I don't see how that can be bad, and it probably isn't. Now, this company, the word that jumps out to me, the words that jump out to me are two things. Omni-channel, right? They're preparing their store like an omni-channel store, and then moderately priced. Everything that they sell is moderately priced, right? It's not the top level. It's that private label, national brands, apparel, footwear, accessories, all things, but all moderately priced. They're that second level, which, by the way, doesn't really line up with Sephora, but they still seem to be having it work. I mean, this stock, after a dismal 2020, has had a stellar 2021. I mean, this rally has been incredible as this comeback story, keeps going. So this is a really interesting play or a stock to look at here today in Kohl's, guys.
Couldn't agree with you more, Kevin. It's another example of a name that's rallied a bunch into earnings, and whatever they report, is it going to be enough? And that's going to be the fundamental question here in about 10 minutes when we look at an example trade. But Jenny, great setup as always, and thanks for joining us. Look forward to talking to you again soon. As we say goodbye to Jenny, I want to welcome in the co-founder of LikeFolio.com, Andy Swan, to the show. Good morning to you, Andy. And I think what Jenny and Kevin point out with the partnerships that Kohl's have, they clearly, there's a couple different ways you can partner with companies. You can do kind of what Target did, partner with Starbucks, improve the experience in the store, but I don't think you're going to the Target because they have a Starbucks. You just might buy the Starbucks because you're at the Target, kind of a thing. On the Kohl's side, Amazon's driving potential customers into these stores. Sephora may be driving potential customers that wouldn't normally go to Kohl's into Kohl's. It seems like pretty shrewd partnerships, at least on the Kohl's side of things, in terms of getting new people in the door that might be pleasantly surprised with their experience. How important is that?
That Jenny shared, 2 million new customers walking in the door. Honestly, I didn't know that 2 million people walked into Kohl's, period. And so for 2 million new ones to come in through an Amazon partnership is a big success. And when we look at the LikeFolio data on that partnership specifically, we see continuing success. We see it, the number of people talking about people going to Kohl's because of the Amazon partnership, up year over year, pretty significant amount, and looking good. Now, on the downside, I would say, Kohl's is not Target. So if you're reading through Target's earnings report last night or today, and looking for clues as to what might happen with Kohl's, I think you're looking in the wrong spot, because Target was really focused on success in apparel and omni-channel, which we look for specifically with Kohl's, and do not find the same type of light at the end of the tunnel for this company that we see for Target. We don't see it at all, in fact. And so I think Kohl's, with the stock price where it is right now, it's going to be tough, I believe, for Kohl's to put up a number that satisfies the street. This is a company whose earnings report last time was very good, and LikeFolio caught that, an unexpected beat. But this time we're seeing just the opposite. We're seeing purchase intent down 33% year over year. And so, I think Kohl's is going to have a tough time putting up a number that satisfies Wall Street on this earnings report, simply because the cart may be a little ahead of the horse right now.
Andy, when I take a look, I always like to record and understand what my first impression is when I look at a name and look at the chart. And the run that Kohl's is on, or has been on up until now, my first impression was, how are they ever going to put up a number big enough to hold that price level and hold this rally, especially what we already know about this earnings season, right? So the best hope is that we stay. The other instance that we see during this earnings season is kind of undersized moves, and this has a fairly large move in it. It's at the higher end of the range, but I agree with you completely. No matter how good these numbers are, how are they ever going to hold on to this price level up here when we look at the expectations for earnings based on where the stock is, based on the real number? I just don't see it, Andy.
Yeah, I don't either. I think that they do have some growing pain type of problems. They lean on their omni-channel quite a bit. It's 42% of net sales, I believe, in the last report. And it's very different than when you look at Target. Again, I just want to bring that back because, with the Sephora and all those types of comparisons, it's easy to make bad comparisons. I don't think that there's a comparison here. Target, reported that 95% of its omni-channel fulfillment comes from in-store, whereas Kohl's is down around 45%. In other words, they have a lot of building out to do, and that means a lot of investment that they still need to make. So they can come on this call and they can be very positive about their omni-channel direction and their Amazon partnership and all of these things that are going well for them. But from an execution standpoint, we aren't seeing it. We aren't seeing omni-channel sales growth happening, and a lot of that could be due to the fact that they don't have the infrastructure to fulfill in-store setup properly like Target does. We don't see apparel popping inside of Kohl's like we saw with Target, a main driver inside of Target's beat. And so, this is a different company, and treating them the same is not the right way to move. And I think that the risk for this earnings call will definitely be to the downside. Now, they could surprise everybody. They've got a lot of trial balloons out there, and some of them are successful. They got some restructuring, some cost cutting, all those types of things LikeFolio can't see. But from what we can see, this is a risky earnings call for Kohl's.
Andy, as we project going kind of forward and we talk about kind of growing pains and the differences between companies that seem to be executing well and maybe where Kohl's may fall, at least anecdotally, anybody I talk to about going to a Target always seems to have good things to say. They enjoy that experience. They carve out time on the weekend to go do that. I don't hear the same for Kohl's. And I don't know if that's just because I live in a more urban environment. Maybe there isn't as many Kohl's. But what is the sentiment difference between a company like Target that seems to have nothing but positive things going for it right now and something like Kohl's that seems to be leaning on its partnerships with big companies like Amazon and Sephora?
Yeah, I think you've hit the nail on the head. I do think so. People like going to Kohl's to return their Amazon stuff. I don't know that they like going to Kohl's to shop, and that's the big difference. So Target, people like going to Target to shop. They're going to grab a Starbucks on the way in and have a good experience, walk through, find some things they didn't need, have a seamless checkout process, and get on their way. Whereas Kohl's, they're really kind of dragging you into there and then saying, hey, by the way, we know you love Amazon. We know you didn't like what you just got from Amazon. So here's a little coupon to run around our store. I don't know that that's, a really compelling strategy. It's definitely getting people in the door, but I don't know how well they're converting those people. And sentiment data does reflect that. So I think there's a difference between the two there as well. And kind of just a side note, what Walmart has done over the past year from an omni-channel perspective and even in store has been remarkable. I think that the turnaround there, that's, when you're looking at potential competitors or threats to Target, Walmart or Amazon, Walmart's clearly, turned things around from a consumer sentiment point of view, much more so than these outliers like Kohl's and others who have still a long way to go.
There's plenty more to ask, Andy, but we got to leave it there as we're out of time here. Appreciate it as always, and we'll see what happens. But the picture painted doesn't seem to be a great one here for Kohl's leading into this report. We'll see what happens. Andy Swan, the co-founder of LikeFolio.com. Always a pleasure. Look forward to talking to you again soon. All right.